All right. Hello, everybody. Welcome back to the podcast, Finance Junkies Sunday night. Dude, I thought you were sick.
I am, man. My throat's really sore, but I could hang for a little bit.
Damn, I just called Steve. He's going to be on because I thought you were going to make it.
That's all right. No, that's fine. That's fine.
Well, folks, we got Chris. Chris just texted us a couple minutes ago saying he was sick. But he's a champ. He's going through it. Chris, how'd you get sick? You want to tell everybody?
I think it was at my nephew's first birthday party. I think, wow. But I wasn't feeling that great that the morning of, but I'm pretty sure that I don't know. It's probably just some like a really bad cold. I'm thinking
you sound sick. You sound like the typical sick person right now.
Yeah.
Goodness. All right. Well, we are here. Steve will be with us in a little bit. I don't know if Carlos is making a VITALY. He's going to be a little late. But nonetheless, we still got to do a show. The show must go on. And we are here. It's Sunday. Thank you, 122 people, for being here. Hope you guys had a great weekend. Let us know in the chat what you did over the weekend. We got the second trading week of January that we're going into. So a lot of stuff to talk about, a lot of different things going on in the macro. I think let's start off with this, Chris. We had the first week of January. You've made a bunch of moves in your portfolio. You've done different things. You kind of positioned yourself in an interesting way. I actually want to talk about what's going on with Verizon because Verizon touched $40. So we'll talk about that in another segment. But first week of January, what is your kind of baseline assessment of the macro? And then we'll kind of talk about CPI and all the other data we have coming up this week.
I'd say we have to be somewhat careful. Just don't go overly confident in this market. I think so many people are bullish for 2024, and so am I to probably the end of the year. But that doesn't mean that we don't have any retracements in the middle. So I'd say be cautious. Don't overcommit to anything, especially if it's super expensive. Not Palantir, not SoFi. Oh, did I say that out loud?
Wait, hold on. Forget the macro discussion. Let's talk about this. By the way, Matt, if you're free, put the link in the chat. Please feel free to join. Palantir is down. We can get to talk about this on Friday. This whole thing happened on Friday, this downgrade, to about $15, $15.90. I think it's like $16.01
right now. I thought it was $13. I thought they got downgraded to 13.
They did, but they closed at about $15.90, $16. And right. I remember giving you a call when it was in the 20s and 21s, and we were talking about the price action. That day, you were just like, dude, I don't know what's happening, but this is not the time you want to buy. You would just head fast and like, this is not the valuation. Well, we're back down. Why do you think we've come down so much? And why did you think it was obvious that was going to happen?
I mean, a combination of insider selling. You saw that. It wasn't like anyone was buying, but there was a lot of insider selling. That could be one thing. Just generally, I think the market was a little bit overbought, and some of the more speculative parts of the market. I mean, look, without saying this out without emphasizing this too much, Palantir is still speculative. It hasn't necessarily performed on the numbers yet. Yeah. It's a great company, great mission, but like I said, the numbers don't justify the valuation. And so when the valuation gets stretched, you have to be extra cautious. On the other hand, when things get oversold and the numbers are trending in the right direction, that's when you usually have to buy, right? So I can't say for certain that Palantir's numbers are trending in the right direction yet. Well, at least not enough to the degree that's required for the valuation to be as high it is right now. And that's the case with a lot of companies, especially in the SaaS space,
Yeah. Yeah, I agree. I mean, look, insider selling at 21 was an obvious sign. I mean, it wasn't just insider selling. It was like dumping of shares. And so it, probably was a little bit of sign that things were getting overbought. Steve, thank you for joining on such short notice to the podcast because we had a vacancy. You are a fan favorite of the show. I just want to let everybody know. I called Steve at 8:59. I said, Steve, hold on, let me explain it. Steve, this is why I get to mute you. This is the good part about controlling the podcast. Steve said to me, Amit, I don't know if I want to do the show tonight. And I was like, why, Steve? Like, everyone loves you. You're probably not doing anything too important tonight. He said, I'm watching Money Heist on Netflix. And my response was, that is the worst fucking show that Netflix has ever created. And I cannot believe you are wasting your time watching that show.
That I will ever take advice from on movies or television, sir. The last person I will take advice on TV shows or movies from my 7-year-old nephew over you.
put it in the chat. Money Heist is bad. It's not a good show. It's like there's like 3 episodes where there's anticipation and like people agree with me, dude. This show fell off. Like it's not.
It's like 5 seasons.
I know, but the second season it was boring, dude. 2019.
I'm already halfway through the second season. I've been cracking out on it.
All right. Regardless, you are here, so we appreciate you for being here. We're going to have a lot of topics we're going to talk about, including index investing. We're going to talk about that because Steve's caused some controversy on Twitter over the weekend. But Steve, we're talking about macro. First week of trading in January. How did you feel the macro is lining up, and what are your expectations into the second week?
Dude, if I could predict what was going to happen on a day-to-day basis, I'd be in the wind, ghost. Nobody would ever see me again.
I'm not saying day-to-day. I'm just saying in general, how are you feeling about the macro?
I think a lot of people pushed off taking profits to this year so they don't have a tax liability come around in April. I think they're pushing it off a year.
And that's the reason for the sell-off. That's your argument.
I don't know. It's what I'm thinking.
I think that's fair. One piece of macro news I want to share with you guys from Tom Lee. So this is actually really interesting. I was just about to tweet this out, but tomorrow is one of the most important days in the market because his team has done some research. 78% of the time, if the S&P is down close to like 1.9% on the first 5 trading days of the year, the rest of the market on average falls 8%. I don't know why it happens. He doesn't know why it happens. It's just the nature of how the markets operate. If we close above their target price tomorrow on the first 5 days of trading, then the S&P returns on average 10.7%. So I think 466 is his level. He's like, tomorrow, January 8th, 5th trading day of the year, we cannot close below 466. Just based on the numbers. It's not like some conspiracy.
And all that stuff is so mumbo jumbo, dude. Like,
no, but I don't. Dude,
but
then, so why is election year like a good for stocks? That's not mumbo jumbo. That's like
no. There are structural things that happen during elections that cause ups and downs in the market. That's different than, hey, you know, if X happens, then Y should definitely happen. And so many times people get lost in this train of thought that in the past this happened, so that means that in the future this is definitely going to happen. So I mean, he could be right, but I wouldn't put any like correlation to it, like, oh, just because the last however many years since 1950 this happened, this is going to correlate to that. Like, it's not. Yeah, correlation is not causation, you know.
Okay. Well, if you take into Tom Lee's analysis, then tomorrow we got to close above 466 or else the year is going to suck. So that's one thing for those that are interested in that.
Let me just say one thing before you go, Steve. I hope people realize this. We have to stop idolizing people on Wall Street and CNBC because they had one good year. And then all of a sudden now everyone thinks that the fucking Oracle of Delphi for some reason. Like, I remember she called Tesla right, Cathie Wood. And now all of a sudden when Cathie Wood says something, there are a segment of investors that just hold her word like, oh my God, Cathie Wood said this is definitely going to happen. And it's like, dude, even she doesn't know what the fuck she's talking about. I mean, how many bad trades did she make in ARK? You know, so I think we need to really stop. Like, Tom Lee had a really good last year with his prediction that was very contrarian. So now everyone's looking to Tom Lee like he's some kind of like prophetic person that's able to outperform the market every single year. Like, no, he called it right. He just happened to be right, you know, but that doesn't mean you shouldn't form your own thesis. So I really hope people need to stop that, where it's automatically because the guy that performed really well last year is definitely going to be right this year. And it's the same thing with me. If I was right, like, for a good portion last year, that doesn't mean I know my shit enough to get it right 2 years in a row or 3 years in a row. So, you know, just like I said, don't idolize people just based on like 1 year of calling it right. If anything, you should be listening to people who call it decades right, like like Buffett and Munger and guys like that. So, you know, just not to throw shade at Tom Lee. I just want to highlight that now Tom Lee, because he got it right, is automatically now something that a lot of people tend to look at and gravitate towards, you know. So just, you know.
You also have to remember there's geopolitical tensions, there's macroeconomic events. Nobody can predict the future. You can have an investment thesis that works out, and if you go by historical data, you could be more right than wrong, but nobody, professional or somebody on the sidelines, gets everything right with 100% accuracy. And there's a lot of moving parts to why things occur. So I think everybody needs to just take a step back and technical analysis is only good up to that minute. Technical analysis cannot predict what is going to happen. There's been many times where technical analysis looked like something was going to happen and either went up or went down outside of what they thought was going to happen. So I don't know. I'm not putting too much stock in what happens tomorrow.
There's just, before you leave, Matt, I'm sorry, Matt, to interrupt, but there's one thing. Just remember this, all right? And write it down somewhere. Like I have a Post-it note written somewhere about it, but it's technicals tell you when to buy, fundamentals tell you what to buy. So you buy strong fundamental companies, you buy them when they're oversold. So the technicals tell you, hey, you should be buying this company because it's oversold, versus the other end, which is which companies to buy. So if you find a really good company, but the technicals make no sense, the RSI is like crazy high, which is just everyone is piling in, you should take a step back and say, you know what, maybe this is not the right time to get into this thing. On the other hand, if it's a really shitty company, the other thing doesn't matter at all. If it's a really shitty company, technicals don't matter anyway. So I would say use both things to find the really good companies and then find the opportunity when you can get in. And that's where you'll have a lot of alpha. You know?
Matt, your overall thoughts. First of all, thank you for joining the podcast. Your thoughts on the first week of trading in the macro, and any thoughts on Tom Lee's argument, which is historically the data shows the first 5 trading days define the entire year, and tomorrow is a really important day for where the S&P ends.
Yeah, I'll first and foremost, I like Tom Lee. I like to listen to his thoughts, but he is kind of an ultra bull for most of the time that I say it. And I would just give people some word of caution, right? Everyone thought that Cathie Wood going into 2022 was going to continue to print money just like she had throughout 2020 and 2021. And we all kind of saw what happened with respect to that. And so, these people, they have their ebbs and flows in the market, just like a lot of people do. And so kind of take some things with a grain of salt. And I'm curious to see how we do throughout the year. But I am a fan of Tom Lee. I like the way he kind of organizes his thoughts and puts it out there. With respect to the first week, I think that it's not surprising after many people, especially the retail investor community, several of us being up above 50%, 100%, some people up over 150%, that they're taking some opportunity to take profits and maybe get into some more conservative nature stocks. I know that a lot of people with the cut in interest rates are focusing on rebalancing their portfolios into more conservative opportunities that have been kind of out of favor for quite some time. So, we talk about it quite a bit on Cashflow Chronicles. We talk about it, a lot of people are talking about on CNBC that some of these more out of favor opportunities like small caps, mid caps are going to shine to light. And so with that, I think you're going to see the overall S&P 500 take a little bit of a hit, as let's just say a lot of money is moving out of, say, the Magnificent Seven and maybe moving into the mid caps. Magnificent Seven are the ones that are really holding up the majority of the market when it comes to the S&P 500. So it's only makes sense that you take a little bit of a pullback. But I'm still bullish on 2024. We just got done KRIS's Patreon call. I think he said a lot of great things in there, and I agree with him a lot with respect to that. I think we're going to have a great 2024, but it's not going to come without volatility.
All right. Let's go to this now breaking piece of news. This broke about 3 hours ago. Here we go, folks. No shutdown. Democrats and Republicans have negotiated to spend $1.6 trillion for fiscal year 2024, $856 billion being defense spending, meaning 56% of our budget is on defense. Here's the question. We're going to start with you, Steve. Is this an insane amount of money that we just have no liberty to be spending, or was this necessary from a bipartisan perspective to at least get through 2024?
I'm not looking to get into a political conversation.
Okay. All right. KRIS, your thoughts on the shutdown being averted?
I mean, it's a good thing for the markets. The last thing you want to do is have internal political strife and then deal with a downgrade. Right now, the U.S.'s credit rating is not exactly in the greatest of shape. It already took a downgrade last year. Our national debt is a concern that if it doesn't get addressed, eventually it's going to become a problem. The issue is that as long as our GDP is good and we're growing, the debt doesn't make that big of a difference. But usually when things go bad, that's when things really are bad. So usually the way that you're supposed to do it in theory is you're supposed to, when things are really good, the government is supposed to cut back on spending, right? So that this way you slow things down. And then when things are bad, government is supposed to be the the guys with the backup and actually deliver more capital into the markets, do more hiring. So if you look at the Great Depression, what got us out of the Great Depression was a lot of government spending on infrastructure. So that helped a lot to get us over the hump of the Great Depression.
Yeah.
Right now, the economy is doing good. So there's no reason why the government should be, spending a lot more money. So right now we're in a position where the Fed is tightening, trying to slow the economy down, and the federal government is not necessarily helping with that situation. They're kind of like piling in a little bit too. So it's almost like counteracting everything that the Fed is doing. And so, disinflation and deflation are kind of like in balance right now. So it's not necessarily a bad thing, but this is one of those things that if they at the current rate that we're going, we don't have a very sustainable future. So I'd say this is where Democrats and Republicans really have to get together and says, look, where can we actually make some cuts that are important enough?
Do you think this deal was a good one, or do you think it was? I mean, I
haven't analyzed the whole thing to understand what was given and what was taken away, because I think that's the key, right? When you look at these deals, when the Democrats and Republicans, both of them have a spending problem. What I mean by that is the Democrats tend to spend a lot of money on social welfare programs, whereas the Republicans are always about cutting taxes. That means less future revenue. So both parties are guilty of kind of like, sabotaging us. And each side needs to kind of give up a little bit, where the Republicans say, you know what, maybe it's okay to do a little bit more of the taxes. And at the same time, the Democrats should say, you know what, maybe we don't need to have every single welfare program approved from the minute someone is born to the day they die, that they're on some kind of like government program. Like, government programs are meant to help uplift people, but not turn people into the dependence of the state. And so that's like I said, it's definitely something that's very nuanced and has to be done in a very balanced way. And when things are not balanced, it can lead to a lot of problems in the future. So,
Matt, any thoughts on us avoiding a shutdown?
Yeah, I think there's pros and cons, right? From a pros perspective, I think it helps remove uncertainty throughout the year, because obviously every time, over the past 10 years that we've had to sit some sort of pause, raise the debt ceiling, it just adds that uncertainty. It drags on the market. So removing that is beneficial. From a cons perspective, obviously adding an additional 1.6 or adding another 3-5% of debt to the GDP is never a good thing. And it's kind of concerning to me that we're not getting that under rein still, and we're just kind of letting that go. But at the same time, if you're able to inflate yourself out of the debt, is it really getting that aggressive, right? In terms of,
we finally have some white people on this thing.
Finally got some white people on this thing.
we're helping out.
Wait, aren't you Jewish? Jewish people don't count as white people.
I consider myself part of all races. Okay,
there you go.
I consider this the DEI pod of all pods.
It's the DEI pod.
Yeah.
Throw out to Ackman, right?
Oh my God, dude! This guy sends like a thesis statement every time he tweets. I can't read it anymore. It's just a lot. Anyway, go ahead, Matt. Continue.
No, you're good. That was pretty much it. I mean, I just don't want to see an additional 3 to 5% of the GDP continue to be squandered away. Or the national debt rather than GDP. But you guys understand what I'm trying to get after. It's just it's interesting, and I agree with Chris a lot. Right, both sides of the aisle need to figure out a way to get this under control. And I just noticed that there's just more and more inefficiencies within the government. I think it's one of the reasons why I'm so bullish on Palantir. I think that it can add a lot of efficiencies if they do get into the government, just like they've done for healthcare and many other places. But at the same time, it seems like they're helping assist with places like Ukraine and Israel, where they're actually assisting in the government spending more money. So it's just an interesting conversation overall. But regardless, I think Chris is hit the nail on the head with respect to both sides need to figure it the hell out, because we're not spending today's money anymore. We're spending our money. We're spending our grandkids' money. All that stuff. I think we just need to figure it out before it's too late, and we owe our money to the rest of the countries of the world and not ourselves.
All right, let's transition to this topic. Vitaly, I'm going to have you go first on this, and then we'll do Steve. Last week, a lot of mainstream media was basically shitting on Apple as it got downgraded over and over again, down about 6%. I feel like a little bit of the same thing is happening on Google, at least maybe not in the mainstream world, but in our finance world. We had the other KRIS make a long post about why he's long on Google, data-driven investing, friend of the channel, basically said they have a data monopoly that no one can take advantage of. And we have another friend of the channel, Crossroads, that is really concerned about Sundar Pichai, execution, the overall search market continuing to be strong, etc. Another friend of the channel, Rango, I had a podcast with him a couple hours ago, and he also mentioned that Google's falling off a cliff and there's no way he would put some real money into that asset. Let's start with you, VITALY. Give me the bull case for Google right now. I mean, I know you've reiterated over and over, but it seems like there's a little bit of fear in the market around the stock.
Yeah, I don't know why. So I don't think there's actually any real fear from big money managers, because otherwise, let's look at the institutional holdings of Google. What is it? Someone look it up right now.
I'll get that right.
Someone could check this. You know, if there was real fear, would we be? Tell me the number. You're gonna be like 5%.
Well, 0.3. I'm asking Bard. Let's see if Bard. I've been using Bard a lot recently as well.
But
it is 59%, 60% basically.
Yeah, it's a 60%. Like, honestly, tell me when it's way lower. You know what I'm saying? I don't think there's a lot of fear holding Google. I think a lot of people still want to accumulate Google, not fear of it. But having said that, Sundar Pichai is the problem. The fact that he keeps messing these things up, and his PR game is weak. You know, it would be great if we had somebody else, like someone who else led like a stronger leader that could take the company forward, because they have the best tech, they have the best AI, but we don't have the best leader. So that is my worry, that is my concern. But in terms of the short and interim in the next couple of years, Google's undervalued. So I'm actually not worried over the next couple of years. I'm worried over the next decade. What happens over the next decade as AI does take hold and Sundar keeps having these missteps? That's the only thing I fear. But I'm still expecting my $200 per share. So me and KRIS have some big bets on it. I also have a lot of shares on it. I have the spreads as well as KRIS has. I'm not worried about that aspect of it. So if you just want to make some money in the interim, I don't know why anyone's scared. I think it's going to all-time highs.
Steven, since this is not a political topic, you are now allowed to express your thoughts and opinions as a content creator. So why is Google a buy right now? And don't just tell me it's undervalued, because the concern is it's undervalued for a reason. So I want you to speak to that as well.
People are worried. People can worry. Fine, whatever. We're going into an election year. There's two places people are going to be spending very heavily: campaign advertising. And I reposted something Patrick Bet-David said. There's 42 or something like that elections globally. Meta platforms and Alphabet are the two places people are going to be spending their advertising dollars. And we're going into arguably the largest election cycle we've ever seen, especially with how much money is going to get thrown at this, because neither side truly wants the other side to win at this point. So where else do you advertise? Google owns search because they own the two largest search engines, Google Search and YouTube. Meta, more than a third of the global population uses it. I think they're both going to do very well. And you look at the underlying fundamentals of Google, you can fix leadership. They have a great product and a great business, and they've been at the forefront of so many things. And when you talk about a company that you're paying, where they trading at 22 times free cash flow in the TTM, they've generated almost 78 billion in free cash flow. They're buying back an immense amount of shares, and YouTube is cannibalizing TV. I mean, look, I'm the moron that has pretty much every channel you can get on cable network, plus Netflix, plus Hulu, plus YouTube at Premium, and plus Amazon Prime. And I will tell you that I do not watch regular network TV. And the only reason I have it is because there's stuff on there my wife watches. But YouTube cannibalizes everything. I would much rather watch.
But again, Steve, the concern is not YouTube. The concern is their search business, which they have a monopoly on, will decline if these.
Well, why?
You know what, Beth, really remember a year ago?
I mean, ChatGPT is so slow. It doesn't give you accurate information. I'm not trusting what I see on any of that stuff. And to think that Google can't outperform them with Bard at some point is crazy. It's crazy.
Okay, so we keep going to, well, there's two things. ChatGPT obviously competing with Bard, but that's not a real competition right now, because I have a lot of services in Google, so it's going to be just hard to leave. I don't know if you guys store your photos there. I have Authenticator app, which I use through there. I have 16 different email accounts, which I use through there. I have all my docs now in there. I don't use Excel as much. I don't use Google Drive is like using a lot of stuff. So I don't know if you guys use all these services, but it's not just Chat GPT versus Bard. That's not the only thing we're looking at. And the other thing I want to point out, a year ago, we were talking about this on this channel, on Freelancer Finance, whatever, on all these channels. Everybody was saying Google is dead. ChatGPT is out. Say it again?
They were saying Google to zero.
Go Google to zero. Matt loves saying that. And basically, Google to zero. And me and Chris were like yelling, yeah, we have to buy Google. Hello, wake up. ChatGPT is not taking over anything for 10 years at least. I've got 10 years of Google to ride until Sunder's out, of course. But that didn't happen. That never materialized. The only thing it did was gave us a buying opportunity to get more shares, and that's what we did. So hopefully people are smart. If we get I don't think we have a buying opportunity yet. It hasn't really tanked. But if we get that, hopefully people are smart and understand that this is just more FUD that keeps coming out about this most powerful company. It's ridiculous.
Let me ask you something. What do you think the largest operating system worldwide is?
That's a good question. Is it?
I have it up. I'll show it after. Everybody tell me what you think.
Windows?
It's probably Android. Because
Android.
Probably Android, probably.
Or the Chrome browser, if you consider that part of Android.
Yeah, because I think 60% of all browsing is done via Chrome, right?
Worldwide, 41.64% for Android.
Yeah.
With Windows.
Android. And
Android
Android is owned by Alphabet.
Yeah.
How much is Windows? I don't see that stat over there. How much is
Windows? Is 30%.
Wow.
Yeah.
Oh,
even among like PCs now, there's a lot of push towards Chromebooks. Like a lot of people, because you don't need the full functionality of Windows desktops anymore. You know?
Okay, Chris, let's get you into this. I mean, we heard a lot of arguments, but what is the bull case for this stock to go higher, even if we're not investing for the next 10 years?
So before we look at why, they're going to go higher, let's look at why they're down. Okay. One of the biggest problems that Google had in 2022 is that they really overhired people. I mean, I'm talking about if you look at the rate of change in terms of how much hiring that they did in 2022, they added almost 33,000 employees, right? Last year, they cut about 7,000. So naturally, there is a little bit of churn there. But one of the things that you're seeing with Google and AI is before they're releasing AI to everyone, they're actually using it on themselves, using it on some of their own programs now and becoming more efficient. And I think that is going to be the same thing that Meta did, right? You remember Meta had a lot of issues with cash flow that was contracting. So even if you look at Google, it's the same exact thing that happened to them. And so let me just bring it up so we can take a quick analysis of it and why. If you look at their financials, their revenue has been growing. So even in 22, they were growing. So their revenue growth is not a problem. The problem is this: in terms of efficiency, they started to really go down, right? So if you look at free cash flow per share, it went from $5, right? And this is in 2021 in December. Then it actually started to go downwards into almost $4. So yeah, they definitely got hit and it was retraced. And now they're becoming more and more efficient. This is on a TTM basis. That's why it's growing higher and higher right now. And I think this right here is going to keep accelerating because of all the share buybacks. And also now they're becoming more efficient with their income. And I think eventually you're going to see, like right now, look at this. They generated almost, this is trailing. Let me do quarterly. Last quarter, they generated almost $30.6 billion in operating cash flow. I mean, and they grew their operating cash flow by almost 30%. This gives them a lot of laterality to do a lot with that cash. The primary thing that they're doing with it is buying back a crap ton of shares. So if you look at the free cash flow per share, it went from $1.40 all the way down to like 96 cents at one point. And then it just stayed there because they were overspending on employees. And now that headcount reduction measures are starting to come on, you're seeing their free cash flow position starting to accelerate to higher. So I think eventually this will eventually make its way into the market and people will say, oh, wait a second, what happened? I missed this whole thing. And it's like, yeah, you did. I mean, just look at this freaking operating cash flow. It's just bonkers, and people are saying search it for Google is dead. It's not dead.
But
Definitely not
long
dead.
term, you think it could be definitely down, right? The next 10 years, even if not the next 2 years.
What do you mean down? Like,
I mean, like if they have a monopoly on search, they only have something to lose, nothing to gain, right? And so,
I mean, that's not necessarily the case. They can use their cash flows to diversify into other business segments. That's always been Google's biggest thing, right? So remember, Google originally only had search, and then they had YouTube, which they purchased, and then they had Maps, and now they have GCP. Like GCP is their growth driver, right? It's not going anywhere. Right. So Google has when you have a business that generates significant amount of cash flows, you have the ability to execute on so many things. When you have a company that's very thinly generating profits, it doesn't give them a lot of latitude to do other things. One of the things that Google has been doing, that's why Google has the other bets section, where they're always investing in third party this, third party that, and just developing an ecosystem. And that ecosystem is just getting bigger and bigger and bigger. So I don't see any competition for Google yet. And this ChatGPT thing, while very impressive with the initial onset of things, I think even that is starting to slow down, because I don't necessarily hear a lot of people talking about ChatGPT as like the search engine killer anymore. Because the use case, I mean, how many of you guys, just our curiosity, are using ChatGPT versus actually searching for things on Google?
I am more, but it's not an everyday thing.
Well, why don't you put a little poll? We'd like to see, and also put Bard if anybody uses that. I'm the only one, I think. But another good point that I think people are forgetting: Google's whole point is to drive everything to zero. So because they don't care about, they just want you to go on using their services basically. So what's happening is ChatGPT has to charge you $20 for their service. Microsoft is now charging, I forgot, 30 per user for some AI tools. Google's just going to integrate it for free. And then either Microsoft competes with that or they don't, but obviously Microsoft will be okay. So my point is that there's always going to be this large segment, this Android population, who will be using Google services. And AI is being integrated to free, going to zero. Okay. It's not going to get more expensive. It's going to get less expensive.
Yeah. And who's to say that they can't integrate ads in between, right? Just like Instagram, every fourth thing that you look at is an advertisement. So who's to say that when you look at that prompt that, okay, once you're done that particular prompt, it shows a small little advertisement. It could be some text. It could be, just something as similar as what we see in Instagram or Facebook or YouTube. It doesn't necessarily have to get your eyes on it, but they might take you 10, 15 seconds before you can enter another prompt. And at the moment, it might just be free, but in the future, just like YouTube, they didn't really had any advertisements. They bought YouTube for $1 billion and were losing a crap ton of money. That's why they were able to only buy it for $1 billion. And now here they are. It's generating, I don't even know how much capital every single year. But I think there's another piece to be said. KRIS mentioned it, the GCP thing. That's just getting into its infancy as well in terms of profitability, and that's going to add a lot to the bottom line. That's growing at 25% per annum. As of the last quarterly report. So I'm very interested to see how well it does for the fourth quarter in terms of profitability. And I think I'm very curious as well to see how fiscal year 24 looks for GCP, because if you think about it, every $1 billion that they add, which will happen very quickly for GCP, is another $20 billion of market cap value. And so I think in 5-10 years, that Google Cloud business itself will probably be generating $15-20 billion of income on its own. And that alone will be a $400-500 billion business. Cloud is not dead. I think a lot of people think cloud is in its I guess last innings, but cloud is still very, very much growing at a very rapid pace. Microsoft's growing at 30%, Amazon's growing at 30-odd%, Google's growing at 25%. So there's still a long way and roadway for cloud.
Keep in mind, this is a company that's generating $297 billion in revenue and $81.4 billion in operating income. They're pretty good at figuring it out. And they have a war chest to acquire, to reinvest in the business and figure it out.
Okay. Carlos, good morning to you. He just woke up. You could tell he's like getting his eyes already. It's all right, dude. It's a long weekend. He must be tired. We still can't hear you. Not yet. This is the most diverse show ever. Still can't hear you.
We're regular United Nations here.
Or regular United Nations here. Okay, Carlos, while you're just say hello whenever, and I'll let you know when we can hear you. Nope, not yet. Here's a headline. Let's get some raw thoughts from everybody. Wall Street Journal headline story: Elon Musk has used illegal drugs, and
I'm a
Tesla
curse.
should be scared.
Did he do that in 2018?
Let's start with Chris first. Chris, what was your reaction to Wall Street Journal putting this out over the weekend?
This is so stupid, man. Like you don't want to like label the media as like fake news and media having bias against one person. I mean, bro, they're revealing themselves to be the most biased part. I mean, they're supposed to be arbiters of truth and supposed to be like the third part. What's it, the third state or something, or the fourth state? I don't know. They're supposed to be neutral. And it seems like the media is infected with people who are like ideologues. And it's sad to see because it happens on both sides, by the way. So don't think that, you know what, it's just like the liberals that are in charge. Like, no, it's just this is where we are in the country where there's no neutrality. And so people are picking up garbage like this and putting it out. The fourth estate. Thank you. The people are just putting up garbage like this, you know, and like, what is the purpose of this? We all knew he smoked weed during Joe Rogan's podcast. Everyone fucking knew. That wasn't like some kind of secret that you're just revealing now. So what would be the point of putting this out there other than just trying to make him seem like a less competent person, that all of his actions recently are because of his drug use, supposedly, when most of the drugs that they even cite are probably like less harmful than alcohol. I mean, I'm more worried about the guy who's chugging back a couple of Remy Martins every night more than Elon Musk smoking a doobie in the middle of a podcast. And that's about it. I mean, whatever, man. It's just the media really needs to stop this shit because they're losing their credibility. You know, I don't know.
Carlos,
shouldn't it be Elon smokes weed, makes $250 billion? Shouldn't that be the story?
That's also that could be that's not a juicy enough headline. Carlos, what were your thoughts on if you even saw that?
Just think they're running out of things to hit the guy with. The guy has the most profitable EV company in the world. If you look at this chart, look at this fucking chart. Saw this posted the other day. Tesla turned the corner financially. Others have a way to go. I mean, just look at the free cash flow cumulative since inception. I mean, they're running away with the EV thing. Plus, at the same time, SpaceX sent over 80% of the cargo into space last year. So, all right, so the guy is like making the most money on EVs, transforming that entire industry, and sending up most of the fucking cargo that's going up to space. And he's doing drugs. Okay, then maybe other fucking CEOs should start doing drugs. You know?
So Carlos, let me ask you this question. Let's pivot the discussion here. Why do you think the Wall Street Journal couldn't get the same types of clicks and attention if they were championing Elon? Like, what is it about the tearing him down that gets the clicks versus the championing him? Because isn't that not a sign of Wall Street Journal? That's a sign of like humans click on the negative stuff about Elon more so. And I know humans like negative news in general, but why can't they build him up and we are excited? Why do they have to try to
you said it yourself. Humans just, that's what sells. Humans.
But is it that what sells, or is that what sells for Elon? Because I feel like maybe people just don't like Elon more than negativity, right?
In general, those sorts of headlines and those sorts of stories go better. I don't know if you were watching that whole debate that's still going on with freaking Gary Black and what's his name, Warren and Omar's catalog, going back and forth about this advertising thing. It goes on, and Gary's still trying to say, oh, Elon needs to advertise or needs to have a PR department. He was and Gary attacked Sandy Monroe this weekend and called him naive because he was pointing out something about ad spend. You know, and I chimed in with a very small bit, like a Big Pharma only advertises, like Big Pharma doesn't advertise on television stations because they are trying to actually sell their products. Like no one watches a commercial for whatever Cialis and goes, I'm gonna have to go get that. That's not what it's for. It's just to ensure that those companies report on them correctly. It's just basically a way of bribing them, spending some money so that they can influence positive news. And that's literally exactly what it is. Sometimes I think it's just as simple as that, right? So if you don't advertise on these networks and they want to run a story about you, going to be easier to get some clicks if they tear you down and make up some news or wrongfully interpret the data to make it sound like something's wrong when it's not. And then usually somewhere down the line in the article, they actually give you the correct information, right? Or they'll say it the way that it happened truthfully. That's what it's about. I mean, I think that there is a bit of a personal vendetta, but I really think that that's what it's about. It's very easy to attack on that front.
Steve, your thoughts on Wall Street Journal? Or Chris, you're going to say something, then we'll go Steve. Go ahead.
Yeah, I mean, people, the thing is, this is all a perception, right? You want to give the perception that this person is bad. And then you just, what's the term? People remember allegations. They don't remember rebuttals. So if you just make an accusation, literally, if the person even like confronts it, tries to provide evidence against it, whatever, people will remember that. They'll just remember the thing. I mean, there are still people right now that says Trump colluded with Russia, even though that's been disproven. Like, till this day, they're like, oh, Trump is Russia's puppet. And it's like, how many investigations later was that proven to be a false thing? But now that that's in the psyche of people's brain, every time that, Trump comes up, it's automatically Russia, Russia, Russia. It's a sad reality, man. It really is.
To your point, it's at the point now that they're trying to invoke the 14th Amendment against the guy for a crime that he was never actually formally charged with and never had due process. Think about that. And it actually is held up in 2 states now. It's pretty powerful, that the power of just that narrative and repeating the narrative over and over.
Yeah.
Steve, your thoughts on this article by the Wall Street Journal?
Who cares? Like, seriously, who cares? Does the company make money? Yes. Is it the biggest EV maker? Yes. Do they have more products in the pipeline? Yes. Look, I may not agree with the valuation, but whatever this guy does in his personal life is his personal life. And the guys.
So you have no issue if he's doing ketamine on the weekends?
It's not my business.
You're an investor in his company.
But if it's not
Vitaly, you're muted. We
destroying
couldn't
the
hear you.
performance of the stock, what does it matter? Like, it's not my business. Until he starts screwing up, it's not my business.
Are you saying this because you do ketamine on the weekends?
No, he sells ketamine.
See, now,
Sorry.
now Steve is known as the guy who does ketamine on the weekend. How is he going to disprove that? How is he going to disprove that now? Thanks, Amit. You just ruined Steven's entire thing. Now people are going to go on Seeking Alpha and type in the comment section.
You call it,
I really like your article, but
if our podcast has that much exposure, then that's a good podcast. I mean, this is growing. So. Go ahead, Vitaly. Go ahead.
I was saying basically now that Steve is an investor in Tesla, he sees nothing wrong with Elon. Okay. As soon as the stock will go down, that motherfucker smoking ketamine or whatever.
No, I mean, look, I've always said that it's an amazing company. I just didn't like the valuation, but the bot changed my mind. And what this guy does in his personal life, if the underlying fundamentals of the stock is not being impacted, what does it matter? Exactly. If somebody has an issue with it and they want to press charges, that has nothing to do with me.
Okay.
Heinz's got a point. Super chat.
I'll tell you guys a funny story.
Real quick, let me just read his stat there after Chris. Elon smoking drugs is child's play compared to having a membership for Epstein Island. That's a good point. Thank you for the $5 super chat.
We got to stop with Stephen Hawking at Epstein Island, okay?
Did you guys see the
Stephen Hawking? It did nothing wrong. Okay?
Real quick, let's get Chris go. Then we'll go. Go ahead, Chris.
So if you want to know, one of the things that happens with ketamine is that if you get too much, you start having like hallucinations and stuff, and they use it as a sedative. So at one time I was working at the hospital, and one patient, this dude must have been like 6'5", just a really big black dude. He looked like John Coffey from the Green Mile, right? So the doctors in the ER probably dosed him up way too much in ketamine, and so in the middle of the CT, he just woke up. And he just started smashing like the Hulk smash on the CT machine. And at that point, he's butt ass naked. And so he runs out. The nurses are all freaking out. I'm there with my boss. And we're like, what the fuck are we going to do? And this guy just broke out of every restraint possible. And you just have this giant butt naked black dude running across the hall, just like pounding on doors and shit. And that's what ketamine does. I mean, if anyone's hearing the nurses, they'll know exactly what I'm talking about. So yeah,
do people do ketamine like meth or something or cocaine? Is it for a high? Like just to
it's like
I've never done it before.
It's like a downer.
But
when I was in college, listen, I'll tell you a quick story about that. When I was in college, I hung out with a bunch of druggies. Like on my floor, the local pot dealer for the building lived on that floor. and he had so much weed on him that he would stuff it in his pillow. It was in his pillowcase, and he would sleep on it every night. So he'd be sitting there smoking weed. I never smoked, but I'm sure I got a contact high. And I'd be sitting there on my guitar trying to figure out Tool songs on an acoustic guitar. People would come in and buy some weed, and he would just reach into the pillowcase, rip some out, and be like, "Here you go. That looks about right." And so after a while, weed wasn't enough, and so they started getting into K. And one time, I guess him, his other roommate, and his new girlfriend went out and like broke into some veterinary office during off hours, and they broke in and stole the ketamine. And it comes in these like little bottles, and it was kind of like plastic wrapped, like imagine like 24 cases of 24 cans of Coke or something like that, Coca-Cola, like this like cardboard. And they came in the middle of the night with this freaking thing, and they were so happy that they had stolen this freaking ketamine. I guess.
Wow.
They decided to like celebrate, so they took some out and put some on a cookie sheet and put it in the oven, and basically like what's the word, like dried it out, so it comes out in like this big powder. And then to celebrate, they took the powder and they put it into the shape of a heart on a cookie sheet in front of me, and we're all there, and they're like, let's celebrate, let's whatever. And they're like, why doesn't each one of us do a quarter of it? And I'm like, you guys are fucking crazy. This is ridiculous. So of course the girl, who's the girlfriend of one of the guys there, she takes the upper part of it, which is like the heart. So imagine you have a heart, okay, and you cut it into 4. The upper part of it has substantially more surface area, right, than the bottom. And she does this entire freaking corner of it, and she basically goes into a K-hole, and everyone's freaking out because they're all there. And I hung out just to make sure that they were okay. And at some point, she just like lost consciousness. They were throwing water on her, and before she passed out, before like she went out, they were like, "What's wrong? What is it?" And she's like, "I feel like my body's wrapped in chicken wire." She says, "I'll never forget that." And she was trying to take the chicken.
You know, dude, that's how I feel when I drink a Mike's Hard.
There you go, right? On your dates with Kelly?
Oh my God, yeah, basically.
I need to get rid of the chicken wire. Help me.
All right, we got 2 more topics. I want to do this one really quickly, and then we'll do this last ETF discussion. But Chris, I want to bring this up to you because you are ruthless trying to find opportunities in the market. Boeing is a very good company. They had some controversy over the weekend. One of their flights lost a wing, and they had to halt all the 737s. Down about 7% in the.
It didn't lose a wing. Hold on, it didn't lose a wing. It lost. I mean, if a fucking plane lost a wing, kiss the plane goodbye, dude.
What did it lose? It lost something.
It lost the window. Yeah.
No, you're not talking about the Alaska Air. You're not talking.
I'm talking about the Alaska. Whatever the fuck it lost, dude. It's down 20%.
It lost a seat. It lost a seat that was miraculously not filled.
Okay, do you think there's an opportunity if Boeing shits the bed tomorrow 10-20%? Like, this is just a random thing. I don't think this is indicative of the full business. Is this something we should keep our eyes on in terms of Boeing if it drops a lot?
I mean, you got to remember, this is the same plane that got grounded for a while because of other issues. So this could happen again. You don't know, man.
Was it the MAX? Was it the 787?
Yes.
Oh,
it's 737 MAX.
That plane has cost me so much money, man. I'm still waiting for. I dumped a ton of money into Boeing back in the day, right around that 737 thing, and I'm still waiting for that stock to make me whole. It was one of my biggest positions in my dividend portfolio, and then right around the time of that 737, it started tanking. I've had to buy more of it as it tanked. I picked up a bunch when it was like $90 again, just to try to lower my average into it. I'm still waiting. I think around 312, I'm back whole again. But my God, that stock just can't win, man. I mean, if you've been in it for a while, you're fine. But I mean, Jesus Christ.
It was at 80 during COVID. So I mean, if you picked it up during COVID,
I picked up some because I had to average down. I mean, you know what it's like buying it over 300, and I put a ton of money in, and then I put it in over 300, then it tanks to fucking $80. I'm like, I'm not selling this. No, I'm not selling.
All I know is the last time I ever fly anywhere near the fucking window, bro. I'm sitting on the aisle seat.
Bro, and that wasn't even the fucking emergency, bro.
No, get this part. The people, there was no one hurt because the people who were supposed to sit there that day, they missed their flight. They were late to it. That's like divine intervention, dude.
Wait, so if someone was sitting there, they would have fallen off the airplane.
Sucked out of the airplane, bro.
Oh my God.
Yeah.
Oh my.
Sucked out of the airplane.
Dude, I'm getting on an airplane in 2 weeks. So this is actually.
Remember, there was a lady who got sucked out of a Southwest flight because like one of the engines exploded. Yeah, the engine exploded and hit one of the windows. And because you're in like super high up, there's pressurization. So she got sucked out of the window, and like she was hanging halfway out the window, and the people were trying to pull her back. So don't sit at the windows.
You have to think that so what the reason why you're getting sucked out, the air pressure within the aircraft is much higher than it is outside, right? So they pressurize the aircraft to make sure that everyone remains not sick and is kind of like as if they're on Earth, right? They try their best, otherwise people would get sick because there's very little air up at 30,000, 35,000 feet. So if immediately if you have some sort of pinhole or anything like that, you're going to have a lot of high pressure going towards low pressure, which is why that has that huge suction effect, right?
Mm-hmm.
All right, let's do this one last topic to end it out for the day. I talked about my portfolio this weekend. Steven got mad at me. He said, would it kill you to add an index fund? I said, Steve, I'm 26. So why do I need the S&P 500? Steve says, and he ratioed me on this one. Okay, you're 26. Let's do some math. The S&P has returned an average of 10%. If you start with zero at 500 per month until you're 65, which is 39 years at a 10% average, you would end up with 2.7 million. Out-of-pocket contributions is 234 grand. You get 2.4 million on top of that, which is a pretty nice return, about a 10x. All I'm saying is that it may not be the worst idea I have ever heard. So I guess the question is Steve right? Should I be doing this right now? Should I be doing 500 a month here, or should I be putting it into Robinhood call debit spreads?
Right.
Steve, go ahead. What's your thoughts?
All right. So first, I'm not suggesting anything. I'm just saying it wouldn't kill you. Okay.
So you're suggesting.
So how much can I say right now, Amit? In all seriousness.
No, I take you seriously. I will listen to
okay.
you. Like you have influence over my decision. So if you really convince me, I will do it.
Let's play this out. You're a young guy. Okay. You're doing well, but you work for yourself. You work for your own company. You
Correct.
do not have a 401k plan that you are putting into with a company match or anything.
Correct. Yes.
Fair?
Fair assessment.
Okay.
Correct. And that's probably not changing anytime soon. Yeah.
Okay. Most people will never amass 2.7 million in their lifetime. Most people will never come close to that. That's just cold hard facts. And I personally think what a lot of people put on Twitter is bullshit. That's just my personal opinion. I think there's a lot of fake people that with a lot of fake money on there that are just talking a bunch of BS. Okay. The bottom line is it is not a bad idea to plan for the future. And the younger you start, the better off you're going to be. So all I'm saying is if you're in a position to make a separate account, and even if it's $100 a month, $500 a month, whatever it is, and just put that into an S&P fund, that's your rainy day. Because if you end up doing this for the rest of your life and you kill it, you do well, you got to think about it. At some point, you're going to have different expenses than you have now. Carlos just had another child. I mean, you never know what expenses you're going to have. And whatever you are making in the market or making from this is going to start going toward other things. But if you can have a side account that is strictly this can be your rainy day. This can be your retirement. And yes, it's not going to be fun money that you're going to be able to use in 5 years from now. But just
Carlos, let me swing the question to you. Do I do what Steve says, or do I put 500 a month in Bitcoin?
No, 500 a month. No, I wouldn't. I'd probably split it. I'd probably split it because of your age. See, if like to Steve's point, if you were a bit older or if you had different responsibilities, I'd say you're still young enough where you've got enough runway where just the time factor. It's like the opposite of theta decay on an options chain, right? You've got time on your side.
Yeah.
So the fact that I was doing some math while you were talking, right? To Steve's point, someone making $50,000 a year over the course of 30 years of working, they're going to amass $1.5 million in income over their entire lifetime. That's like what you make over your whole lifetime if you work 30 years at 50 grand. So you're 26 now, right? So say you have another 20 years before, like you would, or 30 years before you would theoretically retire. If you're not somehow trying to bank at least 1.5 million, then that's going to be rough for you to retire. You know, right. And then also with inflation, you think about what the cost of a home is going to be by the time you buy it, what the cost of kids is going to be. You need a lot of money. But you either have a lot of money to invest where a lot of money to invest initially, or you're going to have to build that with compound interest over time. And if you look at let me just look at the chart of the S&P for 10, 20, 30 years. I mean, you have a lot of data on how that trades.
Let me get the other guys in here and then we'll go back. Chris, your thoughts. Do you agree? 500 a month S&P, that's reasonable?
I mean, I do it. My wife does it for her retirement. There are certain portions of our income that go towards nothing but index funds. And the reason why is because that is our get out of jail free card that we don't ever have to worry about that if it goes up and down in the market. So I do speculate, but majority of, like, let's say my wife's retirement fund and my retirement fund that we get, number one, we're not allowed to really be speculative about it anyway. All you can really do is put it in index funds. Right. But I like that. That's the place that I put it in, which is low expense ratio index funds that perform like the S&P 500. Or that can somewhat replicate the same things that are in there. So even when you do your 401ks, because I know a lot of people in the chat are probably like, well, you know what? I don't see the S&P 500 in my available investments. Right? Because every employer sets different funds that they can put money into. Look for one that specifically says US large cap, because that is pretty much tracking the S&P 500, right? So it may not say outright just this is the S&P 500, but US large cap is probably the closest that you're going to get. And maybe Steve can talk about that a little bit, because me and him had this discussion not too long ago about it.
Real quick, let me get Steve on here, but VITALY and Matt. So we'll just do VITALY then Matt. VITALY, you agree with Steve? 500 a month, S&P 500. That's super reasonable. You're muted. You're muted.
So let's assume you take that you're investing $1,000, 50%, $500 makes a lot of sense to do. And in fact, even I'm still doing that. Carlos was about to say maybe old people should only invest. I don't know if you're going to that old thing that. No. Old people, it's almost too late for us to get that same return, right? Because we're not going to have the 30 years plus. Maybe we will, but it's a lot less likely. You are guaranteed, basically guaranteed, as long as the U.S. stays in power for the next 30 years and the dollar is what it is, you're going to be a millionaire. Right. You're guaranteed. Right. No joke. Okay. Right.
The American economy has to collapse for that not to play out.
Right. America has to fail. And I don't believe that's happening. I believe you will be a millionaire if you do this without gambling on Palantir or SoFi or Enphase or Tesla. You will just be a millionaire. Okay. Right. That's an amazing thing. And you're passing that by because you want to have 10 million instead of 2 million and faster, of course. So even I had a company that I just joined, which I work for, and they are matching me 50%, I believe, not full match, but 50% on what I invest. And the first thing I bought, I just put it all into a total market index fund, because that's where 401k should be.
Right.
They should be in that.
Matt, your thoughts? I know you have a lot of the S&P, so I think you'll agree with them.
Yeah, I have a lot of S&P, and I want to take a step back, right? Because everybody you ask is going to have a different perspective, because it's all personal finance, right? So if anybody has a pen and paper, I'd suggest you write down these 5 things that I'm about to say, because I reiterate this a lot, and I think it's
give me a minute.
Perfect. What's that?
Okay, step 1, go.
I should be writing it down, not you guys. You guys are writing.
Well, no, I'm actually writing a book, and actually I've approached several of you guys to help write a chapter to help share some of the profits with it, and hopefully you guys will be involved with that, and hopefully it'll be a good opportunity for most people. But step 1, what's your objective, right? And then step 2, what's your time horizon? 3, risk tolerance. 4th, how much capital are you going to be contributing on a very regular basis? And then number 5, how active or passive do you want to be in the investment? And I think depending on how you answer those questions and are true to yourself, you're going to answer it very differently. There's probably 90 to 95% of people that I think should go the route that Steve is actually recommending. And I think a lot of that has to do with they don't have the time or wherewithal or emotional intelligence to be able to handle some of the volatility that we see within the markets. And so just being able to put that in there and not look at it on a regular basis and just come back every 2 to 3 years to say, oh, this is going up, I should keep doing what I'm doing, instead of actually, honing in on it. AMIT, though, a person that does a daily market open and has that time to dedicate, I think there's an opportunity for him to truly, over time, outpace the market if he's intelligent and make sure that he manages his risk appropriately. And then there's other people out there. VITALY is a good example of this, is people that are really good and handy with being able to do real estate. And there's a lot of opportunity for people to put some elbow grease and find things that have a decent area of opportunity. And then you could purchase it at a much lower price, but not everyone is willing to put in the effort, right? But it all goes back to, how much time do you have in the day? Because I see a lot of people coming on YouTube, and I'll end with this. See a lot of people coming on YouTube that think that they'll just find one stock and that'll be the only stock. And next thing you know, they'll be able to retire with $10 million in their pocket. And that's just not the case. And a lot of people think they're also going to be day traders when they don't want to even dedicate less or more than 5 minutes a day, 10 minutes a day. And it's like, that's just not the case, right? So if you have to answer those questions, right, find out where you sit within that realm of those 5 questions, and you'll really be able to hone in on what a strategy that works for you. And if you don't want to dedicate any time, and let's just say you do have $500 a month, and your objective is in 30 years be able to retire, I think Steve's suggestions are a very good opportunity for most people, because a lot of people don't really care. A lot of people don't have the ability, and a lot of people actually just want to spend the money as they get it. And they don't actually.
And even if you do care, it's still really hard to play the markets, even if you do follow it every day, like myself, right?
Yeah, there's been years, where I thought this is the problem. You might think that you know more than you do. And, I was a dividend investor strictly for a very long time, and I underperformed the market. People say, you're underperforming the market. You're underperforming the market. Like, but the dividend income, it's why I'm here. I'm and it's like, but I'm an idiot, right? Like I literally just let 3-4 years just go down the way just because I thought I knew more than I did. And I think a lot of times it all just depends. The same answer, though, if you're 20 years, 30 years down the road and you're a 55-year-old man, 60-year-old woman, or whomever, that could be the answer, dividend income investing. And so you really need to sit and understand where you are within each one of those realms to truly answer what you should be doing with your finances.
Well, I just want to piggyback something off of that, because I'm glad that you said that. And I did want to share. I'm sharing something that came up this weekend, which I think is pointing to some of what Matt is saying about, when people had all this extra money, disposable income in 2020, I think that brought a lot of people to the markets, and they started, investing and trying to find those unique 4 letters that were going to make them rich. And I think what we're seeing now is just a bit of the fatigue. People are realizing just how fucking hard it is to even make 10% on your money over a year. And to Matt's point, if the more active you are trading, the more you should expect your returns to beat passive investing, right? So if you're spending 4, 5, 6 hours a day, every single day, and you're only, say, 10, 12% a year, or 2% better than just investing in the S&P, you're actually losing money because of the amount of time that it's costing you, right? So the more active you want to be, the better your return should be. And I did want to share this post from Finance Guy, which was interesting, that came up this weekend. He says, I no longer enjoy investing into dividend stocks or researching them at all. Dividend stocks are the reason why I started investing seriously. The idea of passive income and living off my dividend income fueled a passion of early retirement and financial independence. I had the idea of forever stocks and building an impenetrable dividend portfolio. I no longer feel this way. I no longer invest based on the fruitful idea of living off dividend income. Now I invest with the idea of building wealth. To do this, I need to invest a large amount consistently into a winning asset. I need to put as little effort into investing in stock research as possible. I need to focus my energy on increasing my income, not with dividend income, which requires a lot of upfront capital, but with my 9-to-5 job. That would be the easiest way for me to do that would be to drastically increase my income quickly. So that's what I must focus on. I switched to a proven strategy that's almost a guaranteed win long term. That's the S&P 500.
That's America.
You can read more of it, but eventually his point was S&P 500 and chill. Like a lot of stuff we talk about, it's fun. I think we find investing fun as an active hobby, the way that people enjoy sports, right? Or video games. But we're unique in that sense. And I think most people would that don't have this sort of passion for this kind of thing would be better off just here.
Let's do Steve real quick, then Chris. Go ahead, Steve.
So I've seen some really smart people make a lot of money and blow up their life with investing. It's very hard to get out of a bad stock for a lot of people. And
you talking about me with Boeing right now?
No, I'm just saying in general. I've seen some really bad things happen, and I've seen people not prepare for the future. And everything's great when it's going great, and then when shit hits the fan, it becomes real quick. And some people don't have an exit strategy or just straight up don't plan. All I'm saying is that the Finance Guy, I think some of the stuff he says is ridiculous. That was one of the smartest things he's ever said. And quite honestly, you don't know what his situation is. You don't know what other people's situations are. But investing in the S&P on a consistent basis is a proven long-term winner. The sooner you start and the longer you have time in the market, the better you're going to do with it. And all I'm saying is that you can still try to beat the market. You can still invest in individual stocks. You can still do all these other things, crypto, dividend investing, et cetera, but some type of long-term plan needs to be the foundation and the base. Otherwise, you're going to wake up at 50 and be like, I just wasted 20 years.
Yeah. Yeah.
And
you're
so
right.
many people, what scares me, if you look at the statistics of what people have when they retire, I mean, it is outright scary. And there are things you're going to need in retirement. You're going to need supplemental insurance, which is an arm and a leg. You're going to have assisted living care.
You might literally need a new arm and a leg. Yeah.
There's a lot of things that you're going to have to plan for. And most people don't get the financial literacy that they need at a young age to plan for the future. You're young enough where if you start now, by the time you're 65, it should be no problem to have between $2.5 and $3 million on just 500 a week. That's
And
it.
the worst thing that happens is
500 a month.
Yeah.
the worst thing that happens is you have $2-3 million that you can use for vacations. Okay. If
Yeah,
your
what's the
volunteer
downside?
takes off,
It's a safety.
that's the worst thing.
That's all. It's getting you diversified more because you are in higher risk assets. And if they play out, great. I'm in a bunch of them, but I'm in a little bit of a different situation than you. I'm older. I've had more time in the market, et cetera, et cetera.
Well, you're a billionaire, right?
I'm married. I mean, I'm in a much different situation, but this isn't the worst idea I've ever heard. Like Vitaly said, what's the worst case scenario? If the S&P does what it's always done, you're going to have a couple of million extra bucks.
All right, let's end it on Chris. Your final thoughts, then we'll end this.
So, dividend investing can be good, but you really have to find businesses that have durable cash flows that they can keep reintroducing into the dividend, but also also at the same time grow their dividend. I think one of the things that I see sometimes that can really lead to a lot of value traps for people is they see the dividend yield and they're like, oh my God, that's the company I need to invest in because the dividend is just so high, without asking, why is the dividend high? Like what is causing it? Are they just in a very risky part of the market? Is the stock sold off? Can they sustain that dividend? And so there's so many nuances that come with dividends that a lot of people don't necessarily know the intricacies of how the dividend system works. So for them, I'd say just stick to the S&P. The other thing is like dividend payers can often get disrupted. Like look at Walgreens, right? Walgreens was like the biggest trap that people fell into, saying, oh, well, you know what?
Disney.
This is good. Look at Disney too.
Disney.
Dividends can be cut. That's one of the things that people really have to remember, that dividends are not a sure thing. They're a way to reward shareholders, right? And that's all the dividend really is. It's just a reward system where the company is sharing some of the profits back to you. So you just have to know what you're actually investing in and go from there. The other thing is, and this is the thing that I find to be probably the hardest thing, people buying dividend stocks in taxable accounts when they're making a crap ton of money. Because essentially you think you're getting a 7% dividend, but after taxes, you're only getting a 4 or a 5. You would rather put that money into the S&P 500 and get a nice sustained 8% or 10% over a long period of time and not have to pay any taxes on it. Right. Dividends, you have to pay taxes on. So just remember that, so if you do want to go the dividend route, it should always, especially if you're not retired yet, put it in something that's going to grow, like a Roth IRA, right? So right now, if you said, Chris, I want to invest in Verizon, what's the best way to do it? I'd say the best way to invest in Verizon outside of the options, which I believe are very undervalued, but that's not for me to say right now. I would say the best way to do it is by opening a Roth, putting the money in a Roth, getting some money from Robinhood, because Robinhood is offering a match, right? Or I think even SoFi is offering a portion of a match, like almost like a 3 or 4% match on your contribution to a Roth, and then buy shares of Verizon. And then there you go. Now you've got dividend income coming in, and all the dividends are tax free, and the capital you put in there the tax has already been paid. Good idea. And you've got a nice long sustained, thing. So, just as a FYI,
Yep. All right. Another thing with the S&P, I think that a lot of people don't take for credit, just like we talked about with Boeing, Carnival Cruise, you could have black swan events happen and really take out the company, and you have no idea that they're even coming, and you get shielded a little bit by that with the S&P, and that's kind of nice because you can do as much due diligence in the world, think you're managing your risks appropriately, and next thing you know, something like this happens with Boeing, and it's going to be down 8 to 10%, and you're like, shit, how the hell am I supposed to plan for that sort of stuff?
That happened to a lot of my friends with Disney stock when the pandemic happened. A lot of them had their retirement in it. They've been 30 years, they've been working at the company. and they're still waiting for it to recover. And now they're not paying dividend. You know, it was a mess for them, and
And
it's
remember,
nothing that you can control.
You're always invested in the 500 largest companies in America. Gives you a huge portion of diversification, and you catch runs even if you weren't invested in Nvidia directly. Indirectly, you were invested in it.
Right.
You weren't invested in Meta or Amazon. You're indirectly benefiting from it. There's so many reasons why a standard index fund in the S&P is such a good idea for so many people. I mean, there's just so much. I could talk for 3 hours on it. It's
All right.
proven winner.
Dave, and on this, Dave Ramsey had a, you know, I'm not the biggest
Oh,
fan.
don't get me started on that guy.
Okay,
But-
guys, I actually have to go. I got a meeting, so
It's
literally-
literally-
yeah, we'll end it.
um,
Good shit, guys. Thank you, everybody. Matt is in the description. Steve is in the description. Why is there balloons on Vitaly's face? I have no idea. Did you see
If
that?
you say peace to do that, does it just come up? I
The
don't know.
AI literally is that good?
Look at that.
Ridiculous.
I didn't even know that.
All right.
Nope.
That
Great
happened to
stuff.
me the other day with the thumbs up thing. Remember, it popped up over
Yeah,
my
yeah, it
Thumbs
popped
up.
up. Yeah, yeah.
it popped up on my face. Yeah, see?
Oh, that's pretty
Wait, what is that?
cool.
What's the
It's
cause of
their
that?
new AI shit where they're like
Do a
Who?
thumbs up.
What?
StreamYard, I guess.
Just do a thumbs up. StreamYard.
Look at that. What? That's
That's
insane.
What happens if you do this?
You get demonetized. You get demonetized.
On that note, we'll see you guys tomorrow night. Everyone's links in the description.
Hold
Thank
on,
you,
I want to
everybody.
see the rest of the stream.
Have a good one. Good night.
Hold on. I don't know. It's not working for me. Fuck it.